MST has entered the chat and they're boasting weekly dividend payouts, trying to conquer what MSTY has already established for us with their monthly payouts. In this video, we're going to go over why you might want to pump the brakes if you're considering investing in MST. I'm a math guy, so you know we're going to run the numbers, and I'm going to present you with both sides of the story, and I'm going to play devil's advocate. I'm Afro Senpai, and I'm interested in all things related to the average person like you and me building wealth. Let's go. If we look at funds that have weekly payouts, because they're paying out so many dividends so often, the price doesn't have time to catch back up with itself. So if you hear people talk about declining net asset value, this is what they're talking about. Imagine having a honey jar and you put bees into that jar to produce honey. They're cooking, they're doing their thing, and the honey pot starts to overflow. This is what dividends are. The capital that you put in are the bees. You don't want to disrupt the bees. You just want to take out the excess honey that overflows from the pot. And typically what happens when you have weekly payouts, it's like having holes in your honey pot. Sooner or later, the bees are going to notice and they're going to fly out, leaving you with considerably less capital than what you started with. And what's the point of collecting dividends if all your initial money goes to zero? QDTE covers the market, but does the same similar strategy. YMAX, I believe, does large cap stocks, but it started doing weekly payouts around September and October, and we've seen a decline. Alta started doing weekly payouts starting in March, and we've seen a decline. So if we read the fine print, we do see weekly payouts, which everyone is excited about. Now, all dividend-paying funds say this. The fund intends to pay distributions, if any, on a weekly basis. And this is 150 to 200% levered to MicroStrategies. So weekly payouts sound good in theory, but this is only true if the underlying asset is constantly going up and has no volatility whatsoever, which is good for MST because Bitcoin is not volatile. Oh wait, but what happens when MicroStrategies goes down? That means it's really gonna go down. And you have to ask yourself, can a weekly payout survive months of a downtrend, especially when it's untested? We don't know how big the weekly payouts are gonna be, but you should hope and pray for a small payout, because that means once you get paid the following week, it would have enough time to recover what it paid out the previous week. Or you gotta hope and pray for constant price appreciation. But again, nobody knows what MST is going to do because we've not seen any dividend payments yet. Okay, so looking at the numbers, let's assume that we have $10,000 to start with. At the time of this recording, the price of MST is $22.30. So when we divide the two, we're going to have 448 shares. So let's assume in the first run, we're going to have a 75-cent payout. That means 75 cents is going to be subtracted from the current share price. That means after that, the share price of MST is going to be $21.55. And if we're trying to calculate how much money we're going to receive, we're going to do 448 times 75 cents, and we'd have about $336 on the first payout. And then there's going to be fluctuations throughout the week. And let's say we end up around the price of $21.55 again. And let's say we have another big payout of 67 cents. That means the price reduces again to $20.90. And then we're going to calculate our dividend payout by doing 448 and the 65-cent payout. So we're expected to get about $291.20. Now, we could fluctuate on this price of how much MST will cost at the end of the next payout because we truly don't know, but that is another factor to keep in mind. So we keep doing this. The price drops again, and now we're at $21.08. And then let's say we have a really big payout of $1 whole. that drops the share price to $20.80. And we have another payout of $448. The fund does its thing, has another payout of 50 cents. The share price is down to $20.30. And we have another final payout for the month of $200.24. Now, depending upon the month, we'd either have 4 payouts or 5 payouts, but that will depend upon when the payment date is. But I assume that we'll just have 4 weeks of dividend payments within the month. So adding all those up, we're going to be left with about $1,300. Now let's look at it from Misty's perspective. If I do $10,000 with the current share price of $23.32, we're going to have 428 shares. And because this payment is about to take place, I'm not deducting the $2.37 that shareholders are getting, because the price of Misty was 25 something, but this payment really did just happen. So the $23.32 has already accounted for the price drop, and we'd have 428 shares with a payout of $2.37. We'd be left with a little over 1,000. Now you're saying, oh, then that means we should get missed, right? If we're looking at the total value of our shares in relation to when we started, we've only lost about $20. And that's because I'm not accounting for the 0.816 worth of shares that we didn't buy, because we've only bought whole shares. Now, if we do that same math and look at how much our price has dropped since putting in 10K into MIST, we have about $1,000 worth of unrealized loss because the overall price has dropped so much. Now, this is one thing we need to keep in mind when you are getting into a fund that has weekly payouts. So if you're gonna buy this, be careful. Don't sell all of your MSTY and put it into MIST just yet. See how big the dividend payments are. For me, I already have a lot of shares in MSTY, and I like the fact that it's a monthly payout because it has time to recharge before paying me again. I don't like the fact that MIST is extra levered, because if we have another downturn and it's paying out weekly, it seems like the original capital I put in would be mostly depleted. You don't want to get into a situation where they start doing reverse splits to prop the price back up, because the more a company does a reverse split to artificially inflate the price because it doesn't want to get delisted, the more your capital is being depleted. People might have seen that the price is going down, and then one day all of a sudden it's up big, and then people want to buy into it. Well, you got to check something like TradingView and see, did they just do a reverse stock split to prop up the price? Again, I'm just here to give you the information that I know so that you can make an informed decision to protect your wealth for you and your family. I've learned my lesson about playing around with margin stuff. I do it a lot safer nowadays. I'm not trying to be greedy. I'm just being Winnie the Pooh and collecting the honey, and I'm happy. And that's going to do it for this episode. If you found value in the video, please consider subscribing to the channel. If you're picking up what I'm putting down, let me know in the comments. Are you going to invest in MIST? Or are you going to do like a 50-50 thing? Let me know your game plan. Don't forget to pay that like tax and share this video with somebody who's already invested in, because we always want to add more tools to our toolbox and more knowledge to our brains so we can make informed decisions when it comes to building our wealth. And until the next one, remember to smile, because you are beautiful.
Peace.